Hey everyone, Ben Nelson here. Time for another update for you on the Portland, Oregon residential real estate market. Market is still crazy hot. Inventory is still extremely low, almost no inventory in some circumstances, depending on what sector of the market you're looking in. But it's crazy out here right now. There's tons of competition. There's not a lot on the market, and things that are going on the market are selling very, very quickly. Numbers are way up compared to 2019 this time last year. New listings are up almost 15% compared to last year. Pending sales are up almost 25% compared to October of last year. And closed sales are up about 22%. So huge increases in all of those numbers compared to October of 2019. We are seeing very little increase compared to the prior month, just because we're not gaining any inventory levels, so we just can't possibly increase our number of sales and closings because there's not enough inventory to do that. The good news is new listings did increase compared to September. They did go up almost 8%, so that did add some more supply. That's a good thing. We need to continue to see that. But we did see a trend down in the closed sales just because, again, no inventory, very little inventory. It's hard to continue the trend upward on those. We've also seen over a 6% appreciation rate when you're looking at year-to-date numbers for 2019 versus this year. So 6%, what does that mean? Well, on the median sales price, you're looking at about a $25,000 increase in price. The interesting thing is, looking at the interest rates this time last year compared to what they are right now, interest rates are extremely low. So we are actually more affordable, believe it or not. Now, even with a 6% increase in prices, we're actually having lower payments on that higher price because interest rates are so low. So interestingly, I'll show you the affordability index here. You can see that September, October of last year, 2019, was actually considered slightly less affordable than it is right now. So that's a really interesting, that just shows how important interest rates are and what the big factor that they play in the market and what's going on there. So we have very, very little supply, we have very, very low interest rates, and we have just upward pressure on prices because of that affordability plus that lack of supply. And we're going to continue to see that until we can get more inventory in the market, or if interest rates take some sort of weird turn and just get pushed way up. But they've said they're not going to do that, at least for the foreseeable future. With everything going on, they just want to keep interest rates low. That's one of their ways to keep the economy kind of trying to move forward while everything is shut down and just lots of things going on with COVID. So inventory stayed steady at 1.1 months. Again, digging deeper into those numbers on the west suburbs. So in some of the southern areas, Wilsonville, Tigard, Beaverton, Aloha, even Yamhill County, all of those areas are less than 1 month of inventory. So Portland as a whole, the metro, has about 1.1 months, but a lot of the western suburbs have less than 1 month of inventory, which is really interesting. You're typically in the city center, you see a lot of the lower days on market, a lot of the lower amount of inventory, but we're actually seeing the suburbs to start to see a lot of that activity. And again, that 1.1 month of inventory, so the amount of inventory is the same. There's actually less overall active listings, and that's the reason it stayed the same as far as months is because there were less closings last month, again, because I keep saying it, but the lack of supply can increase the amount of closings by very much if you're just not gaining ground in supply. So if you take a look at the charts here, you'll see that trend down in the active residential listings. We just never had that bell curve again. I mentioned that last month. So we're just still continuing to trend down in the total amount of active listings that we have on the market. We need that to kind of go back up the other way so we can have a more healthy market. We have a very competitive, a very hot market right now, but having only a month of inventory or less than that in some areas is not healthy at all. We need at least a couple months of inventory would be great right now. I mean, a few months would be really good, but 1 month is not good for the overall health of the market. And then if you actually look at the new listings that came on the market in October, it's actually more new listings came on. I mentioned that earlier on. More new listings came on this October than actually the last 2 years in October, and you can see that in the chart there. So we did see a spike in listings, but we just had the closed sales were right behind it. The people there to make offers and have them go pending were just sitting there waiting. So it really didn't help a lot. And so a lot of new listings, but our total active supply is still less than it was last month. They're just getting gobbled up. Another couple of charts I want to show you real quick here is usually this is the time of year we start to see the days on market trend up. Again, just like you see inventory levels and sales and stuff with that bell curve in the summer, you tend to see days on market go down in the summer and then back up in the winter, but we're not seeing that right now. They're actually holding steady and lower than they normally have been in this time of year and going into the holiday season here, which I can't believe we're already there. And then if you look at the closed sales graph, you can see the last 5 years history of that. Obviously, if you look at the first part of the year, you can see the effects of COVID and very low on the closed sales compared to prior years. And then you see the last 4 months, those spiked up and we're way above on closed sales than we have been for the last 5 years. It just shows there's so much demand, and that low inventory level, it's just going to keep staying low if we have the circumstances and the demand that we're seeing right now, low interest rates, and people are obviously out buying. We just need to really create inventory. And I don't really know. I haven't had a chance to look deeper into that. I will try to do that actually, because that would be interesting to see if it's less new home production or if it's just less used homes that are going on the, I hate that term, used homes, but resale homes that are going on the market, and where that break is, which one's affecting it more, or is it both? Is it there's not enough new product being created, or there's not enough resale that's going on the market? So I'm not sure which one it is, or if it's both that's contributing to that. As always, I will post the full market action report to my Facebook page, so make sure to check that out. I put up some of the charts on this video, but if you want to see all of those and all of the data, you can check that out there. Would love for you to reach out as well. Would love to connect, chat about the market, talk about anything to do with real estate, your goals, whether you're looking to buy your personal residence, if you have something that you need to sell, life circumstance change, or if you're looking to get involved in the investment world. Would love to talk to you about that. Love strategizing and coming up with what you want to do there, and really helping you reach your goals in investing in real estate if that's part of what you're looking to do. Thanks so much for watching. Appreciate your time. Look forward to connecting. Make it a great rest of the day.